again.
Ishaq, good chatting with you. Appreciate you taking the time out and joining us today on the show. Shifting focus back home, HDFC Bank's MD Aditya Puri says that the cost of regulation in India will have to come down if banks must be in a position to lower lending rates meaningfully. Here's an exclusive chat with him.
They would provide a lower return on equity. Yes, I'm worried. And given the fact that money is fungible and it looks for the best return, raising capital is an issue. But on the other side, I also wanted to add the other dimension. If you put higher capital requirements for us, you put a higher risk weight, and you have SLR and CRR, I cannot provide cheaper loans because all of this costs me money.
So you believe this needs to change, that it needs to be relaxed to some extent?
Yes.
So what do you believe an ideal level ought to be then?
At the minimum, let's have the international norms so that at least I'm compared on an international level, because you superimpose on that the fact that we don't have a debt market here. We also have an issue in terms of financial inclusion, where we are spreading ourselves thin. We also have priority sectors. So I'm saying, let's understand that the banks going forward are critical to providing the money that is going to be required for India's growth. And we have to be sure that we give them the channels so that they have the return on equity, so that foreign money keeps coming in.
Now, there seems to be a definite downward bias to interest rates going forward. When can we expect HDFC Bank to start lowering lending rates and deposit rates? And again, on the deposit rate front, do you believe you're constrained to some extent by the fact that the small savings rate is pretty much locked at 8.5%?
There is a downward bias if the fiscal deficit comes under control. There's a downward bias if there's enough money supply. If your fist doesn't come under control, and if money supply consequently doesn't increase, the downward bias is limited. The constraint on the NSE to some extent, small saving is there, but I think the other two factors are more important. And so when will HDFC Bank lower the rates? When deposits start coming in a little more and the Reserve Bank lowers its rate.
So you're telling borrowers essentially not to be too hopeful of rates coming down in a hurry?
No, I'm telling borrowers is to work very hard on the government to reduce the fiscal deficit and consequently allow the Reserve Bank of India to recognize that and reduce the interest rate and increase money supply.
Growth somewhere for us in India has taken a sort of a hard landing. Growth has come down significantly. Now, in the event that we sit tight on most of the issues that need to be addressed, and supply side issues, I think, one of the biggest issues that we tend to talk about. If we sit tight, do nothing, what should we expect the new normal for growth would be?
If that happens, I don't even want to conceive of that possibility. The new normal for growth will be the death knell for India. So let's be very clear, that is not an option available for us. The new normal of growth is going to take you into the Middle Ages. Because once you start going below the 5% and you haven't solved your basic problems, you are in for big problems. The citizens, the politicians, everybody. So I don't even want to conceive of that scenario. I'm hoping that from here onwards, within a reasonable time frame, the growth rate issues that are important for the growth rate, the powers that we will come to a resolution. So would we see a slower growth rate, say, let's say, maybe 5.5% or below just for this year? I think it's probably going to be below 5.5%. If we then get some things right, you could see 6 plus. But that option I don't even want to consider, and I don't think anybody else should be considering. Because you really have a situation where you have Bharat, you have India, you have the poor people who are already crying, and if you don't do the things for growth, I at least shudder for the consequences.
That was Aditya Puri in conversation with ET Now's Josh Churian. But time to get you some commodity strategies, and for that let's connect with Harish Kelapalli. He's head of commodities and currency with GRG Securities. Harish, good afternoon to you. Thank you for joining us. Let's start with gold.